Hey, it's Soleil, and this is episode 159 of the Orange Pill Investor. And today I want to talk about LEAPS and what's the most cost-effective LEAPS purchase in order to get the most bang for your buck if MicroStrategy does what I and some others think it will do by the end of 2025. And then I'll show you what I've had to do because unfortunately I can't really stomach the price of some of these options that are that far out. So just as and I want to talk a little bit about the suggestion that Punter Jeff had about considering exercising these options, which is generally not the optimal way to get every last penny out of it, because if you exercise any time before expiration, you're going to be sacrificing some extrinsic value. But as we'll see, I don't think that's necessarily as much of a big of a concern as I thought it was going to be. So this tool here is Options Profit Calculator, and I've already loaded in at the current share price the December 19th 750 call option and the December 19th 3800 strike. So one is very deep in the money and the other one is as far out of the money as you can possibly get. The option chain doesn't even go past 3800. And you can see that for the same price of the single 750 strike, that's going to cost 91,400. I can get 3 of the 3800 strikes for basically the same price, $200 difference. So this is going to be apples to apples comparison here of collateral used. So let's just start with the deep in the money one. And this one, I guess, is somewhat safer because even if the price only goes up like 20% over that whole entire time, it's still profitable. So red is not even on this chart. I'd have to get the stock price down to like whatever the hell, a lower amount here. So that's an advantage. However, let's just go straight to the meat and potatoes. So best case scenario on a 10K position, it's worth 900 grand, spent 991, profit is 821,000. So basically 10x this option here. Excellent. For the same price, if the 3800 strikes goes to 10,000, the profit is 1,800,000. So basically, like, what is that, double? Yeah. It's basically double the profit of the deep in the money one. And that makes sense because let's just go to MicroStrategy. So December 19th, you're buying 0.88 delta here. So as the price goes up, the delta is going to increase, but it can only get to 1. It can get close to 1. So the delta is not going to increase that much. However, all of the way at the top of the chain, these 3800 strikes are 0.3 delta, which means you're only going to get 43 cents on the dollar for every dollar that the price moves. But once this becomes deep in the money, now your 0.4 delta is like a 0.8 delta. And so you're getting much more value if the price of MicroStrategy just goes to the moon. So that's the first that's the first easy conclusion that I can come to, is that if I'm considering leaps like this, my personal preference is if it's just speculative and I'm going to do nothing with this position other than just HODL it, then I would prefer to get 3 of the 3,800 strikes for the same price as 1,750. Now, the steel manning, the reason against that would be, what if the price of MicroStrategy doesn't do what I think it'll do? What if it only goes to 4,000? Well, if it does that, very soon this year, it could make a ton of money. But if you HODL this all the way to expiration, you've paid so much for these, and they're not, you can actually take a loss. So MicroStrategy could go from 1,400 and something that it is today up to 4,000, and if you hold till expiration, then you would actually lose money on this. So it's going to be easier to lose money if the returns are not what I think they will be, but the profits are also could be much greater. So now let's answer the question about whether exercising makes sense. So let's look at the deep in the money one first. If by the end of this year, for some reason, MicroStrategy was at 10 grand, the profit is 824,000, and HODLing it all the way to expiration only loses $3,000. So in my opinion, this would be absolutely worth managing early, but you can just sell the option and pocket the 800 grand. But if MicroStrategy is at 10 grand times 100, that's 100,000, $1 million. To exercise that, you'd need $1 million, and I don't have $1 million, so I don't know who can afford to exercise this. So that's another concern, is in order to, oh, sorry, I'm fucking that all up. So you'd only have to exercise this at what you bought it for. So you'd have to exercise it at 750, which is still 75,000, right? $750 a share times 100. So if you have $75,000, you could exercise this, and then you'd have stock worth $1 million. So, but for somebody like myself, I generally don't have a lot of buying power. And the other consideration is that for tax purposes, and it's not financial advice and it's not tax advice, because I'm not a financial advisor and I'm not a tax advisor either. But the good news, as far as I can tell, is that if you exercise this, now you're not really creating a taxable event. And in fact, you're adding to your cost basis, because you're spending the $75,000 plus the hell was it? Yeah, plus the $90,000 that you spent to begin with. So now you're basically just increasing your cost basis. You're adding more cost here. And, good on you. Now you've got a stock worth $1 million. But if the Bitcoin cycle continues and we peak somewhere here in 2025, and then you're exercising, let's say you're exercising in June of 2025. If you're really worried about the taxes, now you're probably going to hold this for a year so you don't have long-term gains. But if the price has collapsed from 10,000 a share down to 7, okay, are you going to lose 30% of the value just to avoid paying some taxes on it? And maybe the taxes would be 30%. I don't really know. But just keep in mind that worrying a little bit too much about the taxes, oh, I got to wait a year. When you exercise, that's when your timer starts. And so even though exercising here only sacrifices like $2,000 on an $800,000 profit, which is basically nothing, you have to keep in mind what the ramifications of that are. And the price of MicroStrategy is not guaranteed to stay here. So once it goes up here, just like when it went from 500 to 2,000, it didn't stay at 2,000. It dropped back down to 1,000 briefly, and then went back. It's been kind of trading sideways at around 1,500 ever since. So just because MicroStrategy gets to these levels doesn't mean you're guaranteed that they will stay there. But let's look at the 3,800 strikes. So that one would be worth in June 1.8 million. And if you hold to expiration, it goes down to 1.7. So you're going to lose about 70,000 on that one. So that one is basically saying you're going to lose much more if you hold this to expiration and then try to exercise here. So in these scenarios, and then really even to exercise these at the 3,800 strikes, that's like 115 grand, 120 grand. So if you have that laying around to exercise, great, but I think a lot of the rabid Bitcoiners that are investing in MicroStrategy don't really have a lot of dry powder. I mean, Michael Saylor is famous for buying the tops, and a lot of us just DCA into this, and we don't just keep 100 grand laying around so that we can exercise these options. So I don't really know how feasible that is, because exercising means you got to cough up the money for the shares. And you can't just exercise and then think that, okay, now once I have the shares in my account and I owe that money, now I can just sell off a few shares. That is called free riding, and your exchange could suspend your account for doing stuff like that. So, but here's the other thing. So I have a shorter term. I don't even know if I would call these leaps at this point. They were over 6 months old, I think, when I got them. But I have the 3,800 strikes that expire in November, and I don't think MicroStrategy will be 10 grand by November. So for me, holding these to expiration is probably not a good idea. They would have to be MicroStrategy would have to be over 3,700 by November. And there's no guarantee that MicroStrategy would rip this high by then. So anywhere in the green up here, I would be looking to sell. And I really only own these as upside protection. So as I'm selling my little covered calls and getting 1% a week, 1% a week, if MicroStrategy just pumps to 2,400 by next week, then I can sell this LEAPS to offset that cost, so I don't lose my shares, and I can just sell this and then pay for the roll. But if MicroStrategy goes to 3,700, I can make a whole bunch of money here if I sell, yeah, let's just say even in September, I can 10x my money. But if I continue to hold it and think, okay, I'm going to exercise these options at 3,800, now they're only, this is only worth 13 grand. Or heaven forbid, it goes down to 3,700 and I lose money on this deal. So in general, from an option seller's perspective, I'm buying options so that I can sell them. I'm not really buying options so that I can exercise them. And the scenario is much different on a short-term option. When you win big, my strategy is I got to take advantage of that win, because a big win, holding it for another 3 months, can turn into a small win or even a loser. That's less of a case with these very, very long expirations, because if MicroStrategy goes to, even 5,000, this 750 strike, exercise it anywhere in here, you're going to capture most of the profit. Look at the 3,800 strikes at 5 grand. This one is a big difference. So if you win this trade, by the end of this year, you can make 600,000. But if you hold it to expiration and it stays at 6,000 per share, you're going to give half of that back. So it's price dependent. It depends on what MicroStrategy does. I'm going to say if MicroStrategy only goes to 5,000, which would be an insane return for most people. But if it goes to 5,000 by even June, it's worth 500 grand. But holding for 6 more months, it loses 40% of its value. So if MicroStrategy just goes to the moon, I guess it makes sense. You can hold it for as long as you want or exercise as early as you want. But if it's kind of like a good return, but not necessarily over the moon, it might be worth cashing out here for 500 grand, then waiting and letting the price collapse. All right, optionsprofitcalculator.com. This is an excellent tool for modeling out what option prices can look like over time at different strikes. And it's just going to help you be able to plan for the future, so that when MicroStrategy does go to 2, 3, 4, 5, or 10, and you're looking at some of these staggering numbers, you can be paralyzed with indecision because you don't know what to do. Should I stay or should I go now? Scenario. And that decision is very different when you have this 1.5 year option versus this option that's only 1, 2, 3, 4, less, basically 6 months away. Actually 5 months away now. These I will absolutely be looking to dump wherever they pump. Anywhere in this dark green is prime selling territory. And I will be probably doing this. The price of MicroStrategy will probably force my hand because if I'm looking at, like this week, I think I have the 1775 strikes, and if the price went to 2,500, I'd be looking at 70 grand worth of, to roll it. So I would probably end up selling a couple of these leaps to pay for it and making sure that my shares don't get called away. So I hope that helps, and we'll leave it there. Be good, Joe.